Things are lining up pretty well for Monday morning. It doesn't mean the stock's going to go up, but there's certainly a ton of news that would bring the bulls out if the bulls are still interested this week. Elon Musk says that V14 is coming on Monday, that there was a couple of little things that got in the way, and so they were going to be a couple of days late. I would say that's bullish, wouldn't you? Elon Musk also posted a short video. You've probably seen it on X, where a fully autonomous Optimus was going through some martial arts moves with a human. It's kind of those moves that you watch people doing when they're practicing. This video was met with almost universal approval as being very next level in its capabilities, including its reaction times, which you can tell it's responding. Somebody did it in slow motion. You can tell that it's responding to what the other person is doing. It's meeting the blows as opposed to starting the blows and having the other individual meet its blows. It was quick, not as quick as you would hope it would eventually get, but it was good and very smooth, extremely smooth. So that looked really, really good. And so that'll be posted. I don't know if I've announced this yet formally, but it turns out that we have somebody to do the forward for our book, and that would be Robert Scoble. So Robert Scoble is going to do the forward, and Robert Scoble comes in and he says, I talked to Elon last night. He says, it's true. Elon told me last night that we have only seen version 2 of Optimus. He also told me that Optimus 3 will be next level. So that's who's writing the forward for our new AI book. Look forward to the forward. Look forward to the book. I'm still working on the final edit. I'm hoping to finish that in a couple of days. All right, no updates that I could find on Model Q, but I did do a couple of polls. There was plenty of interest in the product, and it appears that the price point around $35,000, based on my small poll, is probably the sweet spot. I asked Grok if this was possible. Could the things that they're taking away get the price down to $35,000? And so this was kind of in a response to a post by Joe Bachdi, I guess, B-H Joe, J-O, and then B-H-A-K-D-I. He says he is thinking that he would really like to see it hit the official, he'd like the official price to come down from $44,500 to $34,950. I agree with him. Here is his potential outline: battery downsizing and change to LFP, that would save about $3,000. Drivetrain efficiency, rare earth removal, $600. Body and chassis, including no roof, gigacasting, etc., $2,400. Interior, the infotainment simplification, $700. Savings, these are all savings. Seach and HVAC simplification, $500. Logistics and assembly efficiency, $1,100, for a total savings of $8,300. And he says, then you can reduce the margins just a little bit down to 15.5 and you would make it. So as I mentioned, I threw all that into Grok and I said, hey, Grok, does this make sense? And it says, besides, didn't he forget about the wheels and the tires? So Grok came back and said, well, it says the analysis looks pretty good. And if you put the tires and wheels in there, that'll be another $800. And that would allow Tesla to be in the same range on the margins as they are on their other cars. So there you go, $34,950. If everything is like we think it's going to be, and these are all still rumors, of course, because nothing has been officially stated, we should be able to get to $34,950 based on the analyses that I just gave you. Motor Trend comes out with this. They just did a new report on the Model Y performance. They really, really liked it. And they said, what's truly interesting is the fact that the 2026 Tesla Model Y performance includes a feature that has long been missing here, despite the fact that many other EV manufacturers have been offering it for some time. So what is that feature? Vehicle to load and vehicle to home bidirectional charging. What? We know we have this on the Cybertruck rather, but this is the first vehicle in the S on the 3 and Y platform that we've seen it. So coming in at, they go on to say, coming in at $59,130, the 2026 Tesla Model Y Performance is a bit of a bargain without any discounts versus the Hyundai Ioniq, the 5N, which is at $67,800. That's $8,000 more. And the Chevrolet Blazer EV-SS, which is $62,095. That's $2,000, $3,000 more. But it doesn't quite beat the price of the Ford Mustang Mach-E GT at $56,490. That would be about $2,700 less. But what you do get from the Model Y Performance is 0 to 60 mile per hour time of 3.3 seconds in a Model Y. A top speed of 155 miles an hour, that's what I need, and a range of 306 miles, according to Tesla. This is all thanks to the Performance 4DU drive unit found under the Model 3 Performance that produces 460 horsepower and maintains a 26.07 kilowatt per 100 miles consumption figure. The power is sent to the ground through a set of new 21-inch Arachnid 2.0 wheels that work with a revised adaptive suspension system tailored just for the Model Y Performance. It also features new springs, anti-roll bars, bushings, and front suspension geometry to make the Performance trim handle better than the standard Model Y all-wheel drive. It also retains the ability to tow up to 3,500 pounds when it's with its included towing package and Class 2 tow bar. So that's only one of several reviews I've seen on the Model Y Performance. But the reason I picked this one was because of that news about having a vehicle to home, energy potential to keep your house looking nice and bright when the rest of the neighborhood is in the dark. Mario Naufel says, China is building Tesla Model YLs, 6 seats with 95% robots. Tesla's Model YL, they're building them in 2.5 hours from scratch to the driveway at Giga Shanghai's factory. The stats on this, 95% robotic, humans mostly spectating. It's mostly the job they have. By the way, there's a video out on this as well. You can probably find it on X. In fact, probably under Elon's account. And it shows, a little stretch of the production facility. Mega castings replace weld spaghetti. So that solves the problem of all that work that needed to be done by humans. As it mentioned, 2.5 hours per car, 1,000 Model Ys rolling out per day. So I'm guessing that since they're only going to do 4 or 5, maybe they're only going to do 4 or 5,000 a month, or maybe they're going to do a lot more. We'll see what happens. But that would tell me they have the capacity to do 30,000 cars a month if they were going 7 days a week. Shanghai's assembly line is basically a robot daycare for newborn Teslas. Yahoo Finance is talking about what's going to happen with the upcoming earnings call. Basically, they're a little behind the times. Let's take a look. Analysts expect the Austin, Texas-based company to report an EPS of 37 cents a share. Now, I thought the street was at 59. I don't know what's right now. We have to find out whether Yahoo Finance, who should know, is right at 37 cents, or whether the street right now is at 59. Either way, we're not going to be anywhere near 59, in my opinion. It says this is a 40% decrease from the 62 cents a year ago. It has exceeded Wall Street's earnings estimates. Tesla has exceeded Wall Street's earnings estimates in 2 of the last 4 quarters, but missed the other 2 quarters. Well, this will be a beat unless they raise it a lot, which I think they will be doing. For fiscal 2025, analysts forecast the electric vehicle giant to report, now this is for all of 2025, to report an EPS of only $1.20 total, down 41.2% from $2.04 in fiscal 2024. Now think about that. Think about that. We know that the energy numbers are going to be up this quarter. We already have them, 12.5. We know that the energy numbers are going to be probably up a lot more than that in the fourth quarter. Various people are predicting 15, 16, 17 gigawatt hours. Those are big, big increases in profit. We know that even if we miss the total number of cars compared to last year. It's not going to be by a lot. We know that the Cybertrucks are contributing more to profits now than they were this time last year because they've been, running them for a long time. So they're contributing more to profits. We know that FSD uptake is increasing. We know this for a fact. So the only thing that's coming down in any significant way compared to last year is going to be rev credit, what do you call it? Environmental credits. Those are going to come down some, but according to multiple sources that I've been looking at, it's not really that much because it's only the United States. So anyway, shares of Tesla have jumped 78.6% over the past 52 weeks, significantly outperforming the S&P, significantly outperforming pretty much everybody. It's yeah. So, all right. So bar chart, they say, has this. They say Tesla's shares tumbled 8.2% following its quarter 2 25 results, as investors focused on narrowing margins and weak forward signals despite revenue, $22.5 billion, slightly beating forecasts, and EPS of 40 cents, meeting expectations. Automotive gross margins, excluding regulatory credits, dropped to 14.6%, which is below expectations. And that reflected steep price cuts, which in the third quarter, we know that's going to be reversed as well. And we know that free cash flow is going to be massive, even though I wouldn't take that massive increase in free cash flow too much to heart, because we know that is going to have to reverse in the fourth quarter, because you can't be going around with zero in inventory forever. They'll have to rebuild some inventory. Analyst consensus, year end, I guess you could, do another blowout if you had a reason to. Analyst consensus view on Tesla stock is cautious, with an overall hold rating. Among 41 analysts covering the stock, 13 have a strong buy. 2 suggest a moderate buy. 17 have a hold, and 9 advise a strong sell. This configuration is slightly less bullish than it was 3 months ago, when 14 analysts suggested a strong buy. And by the way, this is Randy Kirk, so please do what you need to do. By the way, I had 2 people today say that they're making money off of what they're hearing on the show. Is that you too? No, these people said specifically. They gave me very specific things I had said and very specific ways that they have used what they've heard on the channel. I'm not talking about my price guesses. I'm talking about the analytical analysis, the way that I analyze things and the way that I talk about some of the ways. And some of the people on my show come in and talk about, how to use leaps or whatever. And they've made money, and not a little money. And so I wonder if that's you too. And if you've been making money on the show, why wouldn't you at least put $5 out for Patreon or $10? In fact, I've got 2 people that do $50 a month because I think they made a lot of money off of my recommendations. Anyway, it would be nice. Stephen Moran, I know that you think I'm just rich beyond, hope. I think you'd be surprised at I think you'd be surprised. Let's put it that way. It's just fair. It's just right. Elon Musk is rich. We still buy his products. Stephen Moran, governor of the Board of Governors, he says, in remarks posted by Reuters, the Fed Governor Moran said this. He's the new guy. He's the guy that Trump just put in, which is on his side. He pushed for aggressive rate cuts, dissenting at the prior FOMC meeting in favor of 50-point reduction rather than the 25. He attributed this to Trump's administration driving changes, especially immigration reductions, lowering the neutral rate, and making current policy overly restrictive. Prolonging high rates, he says, risks economic issues. Moran downplayed divides with colleagues, noting alignment on long-run policy, but advocating just a quicker policy pace to adjust. This view contrasts with inflation hawks like some regional presidents wary of tariffs reigniting price pressures. Oh no. And even dovish voices like Chicago Fed President Austin Goolsbee cautioning against front-loading cuts amid rising services inflation and job market softening. We just talked about or maybe I just put that on X, the services people were saying, these are polls. These are opinion polls asking purchasing agents, are your prices going up? And right now they're saying our costs are going up. Now, if your costs are going up in services, what costs are going up? Not products, not raw materials. If you're in service businesses, that's not what's going up. What's going up is your rent, maybe. What's going up is your labor, probably, because labor right now has been raising at about 5%. Well, if you got labor going up 5%, at some point, you're going to have to raise prices. So if you got labor going up at 5%, that does not suggest to me that there's a labor crisis. Does that suggest a labor crisis to you? If they're having to raise their labor rates by 5% in order to find and keep good people? No, I don't think so. Now, it could be something to do with some of these dumb states that are raising their minimum wage laws, but I don't think so. I don't think that's what it is. So I think what it is that there's a mismatch out there between jobs that are available and jobs that people have skills to do. This has been going on for a very long time. And so take it for what you will. I'm going to suggest to you that this has nothing to do with tariffs. The job market is fine and inflation is fine. We've got that from every different source. It's not just true-flation. I mean, the Fed, the CPI and the PPI are both showing that the inflation is fine. And if you take away 0.4 or 0.5% away from the numbers that we're getting from them, which is what they claim, what the Fed claims is the tariff part of it, you would be down in the low twos. I'm sorry, I can't figure this out. Well, so when I can't figure something out, I turn to Tom Lee. Okay, so this is according to Grok, putting together everything that he can find about Tom Lee's forecast for the rest of the year. He maintains a bullish outlook, predicting the S&P 500 will reach 7,000 by year end. I'm at 7,100, so as usual, I'm a little more optimistic than he is. Than anybody is. Driven by strong economic indicators like rising consumer confidence, a robust labor market, what I just say, and potential reserve rate cuts. We know that's coming. He views the current U.S. government shutdown as a minor sidebar issue with little historic impact on stocks and dismisses related calamity talk as overblown. That said, Lee does acknowledge risks that could lead to temporary pullbacks or short-term corrections during the quarter. Of course, you can always have a 2.5 or a 5, it can happen anytime, including a prolonged shutdown or election-related uncertainty. He advises investors not to panic over these, emphasizing the market's historical resilience and urging a focus on the bigger picture of long-term gains. Overall, his tone remains optimistic with no expectation of a deeper downturn derailing the uptrend. And by the way, Tom Lee is also, I think, I should have double-checked this before I say it out loud, but it looked like a legit deal. Tom Lee is still predicting that Bitcoin will double before the end of the year. 250,000. And we're sitting at right about 122 right now. So I don't know if that's possible, but anything I guess is possible. We'll see what happens. Let's see. Is there anything else I need to tell you? Oh, yes. Okay. Look, you guys love Phil Beisel. I know you do. He's really interesting. He does stuff that nobody else does. He gets down into this engineering stuff. And maybe I used the wrong thumbnail, or maybe I used the wrong description. I don't know what, but or maybe you were just all watching, college football today. If you've got another, 30 minutes or whatever, or you put it on double speed if you've only got 15 minutes, because he talks really slow. I would highly recommend you go back. I'll put the card right up here. Go back and check out Phil Beisel. Now, also, earlier this morning, I did a thing with Larry Goldberg and Brad Ferguson. And yes, it was a pitch for their new company. And yes, only a very small percentage of the people will be able to participate in their deal, the thing that they've put together. But it's pretty darn interesting anyway. And so anyway, you might want to go see that as well. I'll put both cards up and you can decide if either one of those still need your attention. Tomorrow will be a relatively normal, well, it won't be a normal day because Larry and I were not able to do the Cathie Wood thing today. He's traveling. So we're going to do that tomorrow. I think we're going to do it tomorrow morning. Now, but it won't be like at 9 a.m. It'll be like maybe 10:30, something like that. I know the games are already starting. So maybe, I don't know if he'll call me earlier. Or maybe we'll be able to get it done earlier. I don't know. But as of right now, I think the day will look like this. It'll look like Larry and Randy doing the Cathie Wood thing sometime in the morning. And then later on the day, I will do the regular Monday morning show. And then there will be a final show, or it will be, I don't know if I'll reverse those two or whatever. And that show, you know what I'm going to do? I think I haven't decided 100%, but I think what I want to do is I want to try to bring everything together in terms of all the changes, all the things that are taking place right now that are impacting the economy, impacting Tesla. I mean, there's a lot going on, and we'll be talking a lot about that with the Cathie Wood thing that we're doing tomorrow morning. But I think I want to bring it together just a little different than Cathie did, and so I might do that on that show tomorrow night. Anyway, we'll see what happens. I guess that's all I got for you then. So if everything's good with you, I'll say adieu. It's been great talking to you. Ooh, that's poetry.